We have another NASDAQ stock to talk about, Netflix. Those shares rising ahead of the company's earnings in just about an hour. Stock's coming off a strong year, too, rising more than 80%. Joining me now to discuss Odyssey's Jason Snipe, Big Technology's Alex Kantrowitz, both are CNBC contributors, and it's good to have you both. Jason, how high is this bar, given that very big move?
Yeah, Scott, I mean, as you know, and you just mentioned it, I mean, the stock was up 83% last year. And I think the street has really liked all the pieces that they have hit, they've rung the bell on: ad-supported tier, password sharing, and their foray into live sports. And I think where my real focus is what are we going to hear about updates from the live sporting events? Because when I think about live sporting events, that spells to me advertising dollars. And I think that's where Netflix is obviously looking to move forward. They've highly focused on profitability and engagement, over the last year. This is the last quarter they're reporting streaming numbers. Obviously, the street is looking for a little over 8.9 million new subscribers. But we're moving on from that. So what's really going to be important to me is the ad-supported tier, live sports update, what's going on there, and how Netflix continues to move forward in that arena.
Alex, Jason makes a good point in that we used to be obsessed over subs. That's all that really mattered, we thought, as this company was growing not only here but worldwide. Are ad revenues now the most important?
I think they will be going forward, but I think in this quarter, weirdly, subscriber numbers are the most important number. And I'll tell you why. I think the Paul Tyson fight was the biggest event that Netflix has put on and almost changed the narrative around Netflix. This is a company that can now create a spectacle. 100 million people tuned in globally to watch that fight. And the fight wasn't that good, but it showed the promise of the company to be able to attract such a large audience for events that it manufactures. So I think subscriber numbers are the most important thing to watch today. Let's see if those people stuck around. And then if they can do that, then we look forward and we look at revenue. They're going to double profit. That's expectations. Double EPS this quarter. Revenue is expected to be around $10 billion. But to me, subscriber numbers, can you create a spectacle? Can you bring in a lot of people? If they show they can, that's a very big deal for Netflix.
Well, of course they can. But, I mean, a spectacle comes with a price, doesn't it, Alex? I mean, if Netflix is going to make this a key part of its future, what does that mean for the economic dynamics around this company and what that could translate to from a share price?
Yeah, great point. Look, if those subscribers stick around, then that price will pay off year after year, as those people say, and they say, what's the next thing Netflix is going to do? And that's why I'm looking at subscriber numbers, because if they just tune in, they pay the whatever it is, $10, $20 for Netflix, and then go away, then that money isn't a worthwhile investment.
Jason, what about price hikes? I mean, they got to pay for this somewhere, you would think. Is that something you expect?
There's no doubt about it. And listen, they haven't had any price hikes since October of 2023, and that was for the standard tier. And for ad-supported tier, they haven't had any price hikes since November of 2022. So I do believe that is definitely in the cards going forward. I think the point that you also made on the expense of live sports. I mean, listen, we also saw those NFL games on Christmas Day. Those are about $75 million a pop for the licensing for those deals, for those games. So eventually, they're absolutely going to have to raise prices, and I think they will do so because, again, their focus is more along the lines of profitability. I hear Alex on the ad-supported tier. Again, we're going to hear from them for the last time this quarter, but I think it will really go towards ads, and I think that's going to be the story.
Do you think we could get that today, Alex, a price hike itself, or a lead on that we may get it in the very near future?
Definitely, because as they stop reporting subscribers, they're going to want to hand something to Wall Street, hand this little token to say, hey, listen, we're making this shift in reporting, and there's a reason why. Profitability, revenue is going to go up. And, of course, they're going to need to try to maximize as much as they can, because if they're not able to jump subscribers the way they have in the past, right, even the way that they're expecting subscribers to come in this quarter is going to be less than it was in Q4 2023. So they're going to have to show that they're going to be able to make more money off of those subscribers. Of course, I'm expecting them to beat subscribers, but if they don't, then that price hike makes all the difference in the world because it shows that they'll be able to be more profitable on similar subscriber numbers.